Hello, fellow traders. This is TheRumpledOne, coming to you Friday, September the 4th, the year's 2020. Let's talk trading. Weekly wrap up NFP Day. But first, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. None of you traders mentioned me doing my rapid speaking, so I decided to go back to the slow voice. Weekly wrap up NFP Day. I hope everybody's had a fun day. I know I was on the phone earlier with Walmart. He tore it up today. Um, I only made a couple of trades because, as some of you may recall, I'm running for union president out here. And so the ballots go out today, and my mind is split. So, one of the things that, we do talk about here is brain management. Okay. And if your mind isn't totally in the game, it's really not a good idea to be trading because you could lose all of your money. So, I took a few trades, but um, I didn't engage as much as I could have. Okay, for the weekly wrap up, all gaps filled. You notice here that the pound had a huge range. I mean, we're talking 300 pip range here for the week. Now, if you look at the daily chart, here's the high for the first day of the week. Then you see the second day of the week, we broke out. We made a monthly and yearly high right here. Then, actually, we had the first day of the month. So, and then right here, this is the first day of the month. Then on the second day of the month, we broke out of the first day of the month. And we also broke out of the first day of the week. And here we broke out of the first day of the week. And here we broke back into the first day of the year. So you can see we went below the yearly open and right back above it. So once again, trading these horizontal lines here, the monthly open, the weekly open, the yearly open, trading those horizontal lines could have been profitable. Now here, right here on this one yesterday, might have gotten your fingers burned just a little bit. So we're 15 pips above the yearly open, 108 below the monthly open, 70 below the weekly, and 19 below the daily. These horizontal lines, once they're put in, that's where they stay. And they're static targets, very easy to trade against. When I say easy, what I mean is you don't have to do any computations. And once you put the lines on the chart or use the indicator, they stay put. So that's what I mean by easy. Trading is simple, but trading profitably is not always easy. You can see here those inside bars earlier. I guess that was a couple weeks ago, 3 days ago or 3 weeks ago for the weekly, 14 days ago on a daily. Those trades were there. So this had a few inside bars to trade today, but since it was NFP day, mainly just you could just look for the simple breakouts. And this is one where I kicked myself, and Walmart can attest that I was looking at the chart on the 1 hour, and I saw it was going to break the previous day's low, and I called it out, but I didn't take the trade. And there was actually 3 trades where you could have taken that short, and this was the last time to get on the bus or hop on the boat. But But once again, daily, you can see ranges on an NFP day, only 6 pairs over 101, right at 100. To me, there's something wrong with that picture. This is NFP day. On NFP day, trading across the daily open and the previous day's high and low usually can be profitable. So you see right here, we didn't get a chance to go across the daily open on the during the NFP release. On the rats, you can see here, after we pushed down, green rats are now feasting. I just saw price went all the way back to 60. Now, there's something in the rat zone, the range large enough indicator. There's something I should probably just let you guys know, and I'll probably do a whole video on rats sometime soon. I had added where did I put it? Oh, I didn't put, I guess I am going to have to add something. I think what I did was I looked at the pips trigger, and I think I just doubled it to say if you have a pip trigger of 20, so you have 20 here, so it has to be 40. I think what I'm going to do is put in an input. So in the case of the pound, you probably want the pound to be at somewhere around 80 to 100 pip range before you start looking for rat trades. Rat zone trades, that is. Because if you would look for a rat zone trade here, you would have gotten your fingers burnt. And so we want that range to push out. So for example, here, if you would have taken a trade long, there would have been an opportunity to take profit. And you can see even here and here, not so much this one, just depending on where you got in the trade, there was an opportunity. And that's all we're really looking for, is opportunities to make profit. That's what trading is, right? And on the pivots, as we wait for the computer to load, you can see we took out those weekly and monthly pivots here. And I do believe I called out that weekly pivot. You can go back to, I think, either the Sunday or Monday video and see I called out the 1.3252 to look for that pivot to be hit, and it got hit yesterday and again today. So once again, those pivot trades can pay off. You can see here we took out those weekly pivots. Now on the daily, we've only got 2 for the year, missed for this year, 2020 so far. Now on the daily, we had a missed pivot up here at 3406, call it 3407 here. But you see we took out a couple of these missed pivots from before. So now we're only looking at 1 missed pivot for this month, no missed pivots for August, but we still have 1, 2, 3, 4 back in July and 1 back in March. Whether or not these pivots get taken out this year, we'll just have to wait and see. And I had mentioned earlier, I told Walmart, I said, I'm looking for that break here on the wick zone. And sure enough, when price fell, it fell. That would have fell nice and hard. That would have been a nice trade. And looking at the ranges, you can see here for the day, 143 pips, 78 percentile. So out of the last 100 days, 78 days had a range less than 143. Average range being 115, which was yesterday on the nose, right? And so once again, when you see these types of ranges being put in, this is why I say it's for the rat. You want to look for, so at least 80, if not 90 or 100 pips or more before you start looking for that rat reversal, especially if you're new to trading out of the rat zone. And if you have the smart rat indicator, it gives you those percentiles live dynamically. Here, just looking at some, a simple scalp trade setup. We talked about following the dots and using the dots. And here's one right here. There was a 2 ball on the bottom. It opened above the mid dot. When it broke that high right there, you could have just taken that trade and just follow the dots till you have one that opened below. Exit that trade, and it would have been made some nice pips there. And that's all we want. We're not looking for the McGilla trades. And here we go live. There's a 3 ball. And normally the way I trade it is when it crosses the mid dot, but right here, the way Walmart likes to trade it, there was the entry. Now, actually, the Walmart wouldn't have taken this trade because there's the previous mid dot. It's sitting right there. So since it opened above the mid dot, he wouldn't have traded it. Normally, I take the trade right at the cross here. So I'm a little more aggressive sometimes on those entries. And actually, usually, we're looking at the M5 for an entry. So this trade hasn't played out yet on M5, though it probably will shortly. And then, okay, what happened to my Sweet Spots gold indicator? Did I turn it? Oh, I turned it off for some reason. Must have been testing something. So once again, just trading the simple Sweet Spots, the Walmart method, candle color at the line, or you can take the break of the previous H1, whichever comes first. So in this case, 47 came first, taking that break. And here, in this one, once again, you could have taken that break because it opened right there. On this one, you take the Walmart line before you take, because the break of the previous H1 came afterwards. Once again, NFP day gave a lot of price action. Just simple candle color at the line type trades. Nothing fancy. No squiggly indicators were harmed in the making of these videos or this video. You don't really need those to trade. Just have your trading plan in place, trade your plan, make sure you have your risk management in place and your money management. And most important, the brain management. And that's why I wasn't trading today, because my brain wasn't in the game. So that'll do it for the weekly wrap up, fellow traders. I hope you have a profitable week. Hope you had a really profitable NFP day and a fun NFP day. And if you're here in the US, this is Labor Day weekend coming up. So be safe out there, especially if you're on the road traveling. All the craziness that's going on in this country at the moment. Other than that, when you come back to your trading platform next week, just remember one thing. It's not what you trade, it's how you trade it. So go out there and drain the banks. And remember, hopefully you watch this video to the end. Please click subscribe and click on the like button. And then click on share and share this video across the other social media platforms. TheRumpledOne, over and out.